A steep drop in the value of the dollar, triggered by downbeat US inflation data, once again confirmed that an inverse correlation between the dollar and almost all other exchange instruments had become deeply entrenched. Against this background, oil immediately added more than $2 per barrel. Apparently, the asset will continue to gain value. Today, the United States is set to report data on retail sales. September is forecast to record a significant slowdown in retail sales growth, which will inevitably lead to a further decline in the greenback and accordingly higher oil prices. They may well rise above $95 per barrel. Thus, Brent crude oil futures pulled back from the level of $91 by about 3.5%. As a result, the quote returned to the 95 mark and moved sideways. The downward cycle initiated earlier this week is still relevant in the market. If the price falls below 92, the volume of short positions will increase. Alternatively, consolidation above 96.50 on the 4-hour chart will lead to a shift in the market sentiment, and in this case, the quote will most likely hit towards the resistance level of 100. As for gold, the situation is somewhat different. Of course, US inflation data pushed the yellow metal up. However, prior to that, it saw a sharp drop, and its subsequent rally failed to offset early losses. This is due to strong pressure from a monetary policy pursued by major central banks. Even cooling inflation in the United States cannot force both the Fed and the ECB to ease up on the pace of a further interest rate hikes. This policy inevitably leads to the flow of funds from the safe haven asset to another one. An increase in interest rates results in a higher government bonds yields, which dims gold's appeal. Of course, the metal may still grow, especially amid a decline in the US retail sales, but its rebound is likely to be modest. In the medium term, gold is expected to continue losing value, heading for $1,600 per troy ounce. Meanwhile, driven by speculative moves, gold futures locally got out of the $1,660 and $1,685 sideways range, and the quote temporarily fell below $1,643, but then came back. And in this situation, it's worth keeping focusing on the current range, considering its boundaries as reference points. Speaking of the ruble, the situation remains unchanged. The Russian currency is gradually stepping out of oversold territory. However, the quote is correcting at a slower pace than expected. Apparently, the ruble will stabilize in the area of 62 to 63 rubles per dollar only next week. And that's all for now. We wish you profitable deals and see you on our channel with a new video in a couple of hours.